Hello, everyone. College Coaching Network here again. We are actually excited because today is outside of our traditional schedule. Usually, you're
Yeah.
accustomed to seeing us do social learning live at 7 p.m. Now we do it once a month. But today, we're actually excited because we are bringing a special program to you about how to improve your credit image. So right now in the midst of the pandemic, I know everyone, look, we are semi-guilty. A lot of us had to go credit card crazy, which we want to we're paying off. But then also, just I think sometimes credit isn't necessarily one of those conversations that parents have with their children. So a lot of the time, I know from personal experience, the plight that we face is that we didn't understand the power of our credit, whether that was good or bad, because then it's like, oops, it's bad. Now it's like this long train to get it back on the right path. But we have a expert in knowing all things credit, Mr. Kenneth Stone, here with us today. And we're excited to be able to have him to share this awesome information because trust me, people, there's a lot of money spent to help people with their credit. And if you are tuning in today, look, tell a neighbor, phone a friend, like, share, subscribe, because we're bringing some amazing information that can change you and your family's life. So, Claude, I'm going to turn it over to you.
Yeah, real quick, because I want to get out the way and let Ken give it. So it was a continuation tonight of the conversation that we had on building Black wealth. So Ken, along some other panelists, were out, and we went into just the education behind it. So I want to set the stage real quick as Ken gets ready to go through his expertise on the how-to and the tactical parts of getting your credit up to speed. But a lot of times, if you have bad credit, you're in a position where you don't have access to capital. So if you want to start a business, you don't have access to that. If you want to buy a home, sometimes you're restricted to being a renter and you're paying somebody else rent, and therefore you're building their wealth instead of building your own. Sometimes I've seen a guy, Ken and I, we've done a lot of workshops over the years. There's one guy in particular, I will not say his name because I don't want him to put me in a headlock, but this young man had a car and he was paying $750 a month on a $15,000 car payment on a $15,000 balance. I want to really get that to resonate with somebody. He was paying $750 a month for a $15,000 note. Now, anybody that has decent credit knows that anywhere probably between $300 to $400 should probably be around where you are. So his wealth was leaving out of his family because he was overpaying in interest more than he deserved to pay. So tonight, I want to make sure that we listen to what Ken is talking about, because if you want to be a person that's giving tithe and offering to your church, get your credit in a better position so you have extra money so you can give back to your local community, right? If you get your credit in position, you can do a lot. So I'm going to give it over to you, Ken. Do what you do and help us out tonight so we can get our credit to where it needs to be.
Great, Claude. Thank you for having me, because credit is so important. And it is the new wealth, because if your credit is bad and wealth is leaving out of your home, just like you pointed out, Claude, that you pay more in interest, more in fines, more in debt that builds up, and then the interest and the fines on top of that. It is wealth that is leaving out of your pocket, out of your home, from your family. So it is just extremely, extremely important. So Mika, do you have that?
I do. Hold on. There we go.
All right. So what I'm going to be talking about this evening is how to improve your credit image. Because as a banker, I am a banker, and I've been in financing for over 30 years. Your credit presents a certain image, a specific image. And if that image is not good, that is a reflection of your character. So we must have that looking better for us. We're going to go over that, and hopefully I'll point out some things tonight that will help you. Take the next slide, please. We're on a crusade to destroy the effects of bad credit management in people's lives because we were not taught these things. You know, growing up in a Black household, I was not taught these things. And it's because my parents did not know these things. And this has been passed on from generation to generation. So we need to end this. Next slide, please.
Yeah, yes, we do need to end this.
Yes, it is definitely costing us a lot of money.
So what we're going to cover, what I'm going to cover, if I can't cover all of this, you know, that's okay. I can at least get some important things in. We're going to go over what is a credit score, what are credit ratings, your credit scores, the credit score provider. Thank you, Mika.
Mm-hmm.
What factors influence my credit score? How does my credit score affect me? And a lot of people don't realize, always ask me a question, what is a good credit score? And then how do I improve my credit score? Next slide. So what are some of the ways that bad credit can affect your lifestyle? For one thing, everything that you purchase is going to be more expensive. Mortgages, auto insurance. Yes, auto insurance. When you go to apply for that insurance, they're going to look at your credit. And if your credit score is a 500, you're going to be paying a lot more on your auto insurance. Yep. Life insurance, the same. Employment, the top 500 companies, or basically any government, especially government city employers, they are going to check your credit background because, as I said earlier, that is a reflection of your character. Student loans. One thing is that if your credit is bad, you won't qualify for the best student loans or maybe any student loans. And if you do qualify, you're going to be paying twice as much as someone with good credit. Payday lending. Bad credit forces you into bad decisions. And bad decisions is payday lending and paying 300% interest. Your credit cards are going to be higher. Your homeowner's insurance, business loans. I'm not going to go over everything on this list, but you see everything here on this list. Everything is affected by your credit. One thing I will touch on real quickly that all of us have is a cell phone. Well, bad credit, you're going to have to put down a large deposit for that cell phone, or you're going to have to go to one of the other type of cell phone companies, I'm not going to mention any names, that are going to charge you outrageous fees for coverage that someone with good credit is not paying. They're not paying that penalty.
I can't hear you. Again, what you said? I'm just playing. That's what happens when you have bad cell phone coverage. You can't hear anybody.
That's good, bro. So you can't hear me, can't you? Okay, next slide, Mika. Okay. What is a credit score? A credit score is a number that is used to predict how likely you are to pay back a loan. And that's, as a banker, that's what banks look at. They want to know what is the likelihood that you're going to default if I give you some of my money, if I give you my money, if I give you this loan. And that credit score is that reflection. A good credit score range starts as low as 300 and it goes up to as high as 850. Next slide.
Real quick, before you jump into the three bureaus that are out there, I don't know if I didn't see your slide deck, so I don't want to take any thunder away. If you have, can you give us a range between kind of not that good credit, fair credit, really good credit, and like top of the line credit? Can you give us the bands of between 300 and 850?
Yeah, that's going to be on a later slide that I might not be able to.
I digress. I digress.
So, yeah, you can look at the range of 300, of course, is the lowest and is bad. So from 300 to basically 300 to 600 is bad. The reason why I'm saying 600, it used to be 550, Claude, but because of a tightening up of the credit criteria, everything has gotten tighter. They have made getting the credit harder, and that's driven up the credit score. So it's no longer 300 to 550 considered bad. Now anything below 600 is considered a bad score, which means you're not going to be able to do much. If you get a credit card, you're going to have to get a secured credit card, put a deposit down, and you're going to be paying extremely high interest rates. And also you're going to have to pay a yearly fee on top of that. Then the next breakdown would be 600 to 650. You're fair then. You still haven't even reached good. 600 to 650 is fair. 650 to 700 is just now you're entering into a range to where you may be able to qualify for maybe a little bit better credit card up to 700. But until you get up over 700, and they used to have this program out called the 700 Club. Well, I have a program now called the 700 Club, but it's not like it was on TV. This 700 Club has to do with your credit.
Yes.
If you're not in the 700 Club, you are not in the credit world. You can't play the game because credit is a game. And if you're not at least you can't even enter the room unless you have a 700 credit score.
That's right.
So, and anything above 700 to 750 is good. 750 and above is excellent. You can just about write your own ticket when you get above 750. 750 to 800, and the best credit score is an 850. So 800 to 850 is perfect. You're not going to have anything bad on your credit, nothing at all, and everything is coming up roses. Lower interest rates, no fees, no problems. Banks just want to give you money, and one of the secrets in banking is that banks want to loan money to people that don't need it.
That's right.
And when you have that 750 and up credit score, that 800 credit score, you're showing, well, listen, I really don't need your money. So I hope that kind of answered that question.
That was perfect.
It was perfect. I'll let you continue, but I definitely have a
you got some questions?
Yes, I do. I have a question, but I'll let you continue.
Okay, go to the next slide.
Okay.
Next slide, it might answer some of the questions.
Okay.
Okay. What factors affect your credit score? I mean, how do they come up with these credit scores? 35% is payment history. That's the basic. You must make your payment on time. And that's 35% that makes up your credit score. So if you don't have that part right, it's kind of null and void.
And let's make sure that the students know what type of things are reported on credit. Students and parents, because some may not know. At least the little I know it's like your utilities, because some things don't report to credit bureaus, but others do. So can you kind of clarify when we're talking about payment history, what are like the major things that they're looking at that report to the credit bureaus that they need to make sure that these things are paid in a time,
Sure, that's a very good point, Mika. Let me go over a few things that are not reported.
Okay.
To the credit bureau.
Good.
One thing is race is not reflected on your credit bureau. Surprising. Okay. Race is not reflected on the credit bureau. Also, utilities are not reflected on the credit bureau unless you don't pay them. If you don't pay them, they will be reflected as a collection. Now, there are some companies that will report some utility payments, and I can give you more information on that later, but those types of things are not reported on the credit bureau. What is reported on the credit bureau? Installment loans. Installment loans. And what is an installment loan? Installment loan is that auto loan. Okay. Installment loan is if you go and it's a fixed payment over a set period of time. That is an installment loan. If you go to a bank and you get a particular type of loan from a bank, an installment loan, they set it up for a set period of time to pay it back over a 24-month period at a set payment. That's an installment loan. Those are reported. Credit cards are reported. Mortgage loans are reported. Trade lines, basically anything that is a trade line, those are what we consider trade lines, are reported on your credit bureau.
That's good.
So the next factor is 30% is the amount owed. It's very important on revolving debt. And this is one of the biggest factors on your credit score. What I have seen is that drives a lot of people's credit scores down is carrying large balances on your credit card, on revolving credit card. Revolving credit cards being MasterCard, Visa, American Express, department store charges. But basically the big three, which is MasterCard, Visa, and American Express. Those are revolving cards and they give you a high credit limit, which might be $1,000. And if your high credit limit, you can make all your payments on time. But if your balance is at $900, we consider that you have maxed out your credit card. At 90%, you're maxed out. That's not going to reflect good on your credit score. You need to have that below a 30% credit score. I mean, a 30% limit from the high credit. So if you're at $900, you can't be below $300. I'm sorry, my dog is going crazy over there.
No, you're good.
But you need to have your balance below 300. If your high credit limit is at 900, that's 30%. So 30% or less is the target that you should shoot for.
So
okay?
can I add? I want to add something to what you just said right there, just to make sure we bring clarity. So one of the things that Donahue talked about from the last conversation that we were in, and then also too, Daryl talked about this too, is having good enough credit, which is what you're talking about tonight, and then leveraging that credit to create in the business that you can have lines of credit in, right?
Yes.
So if you have that 700 club that you're talking about, and you can go out and get a line of credit, then you can have that, you can have maybe shift some of the debts that you have over here to the business line of credit if you have a small little business that you do, and that can keep you from going over that 30%. The problem that we see in the urban community or the minority community is we don't have the education to know that we can play a different game, as you talked about. And so by getting that line of credit in the business allows us to now make sure that we don't go over those thresholds. And what we see happening a lot of times is we start reestablishing our credit, and then we hit tough times. And then what do? We run directly to the credit card. And then what does that do to your credit, Ken?
We charge back up the credit cards and lowers your credit score. Yeah, yep. Absolutely. Absolutely, Claude. Yeah, that's a very excellent point, because you can establish business credit and shift some of that weight over to the business lines of credit. But right now, I think that that might be a little bit a step above what we're talking about here. Right now, I just like to deal with some of the basics here. And then later on, you know, I'm sure there are other experts that can go into the business lines of credit. The basics here are just what you see, that we need to know what affects your credit score. And these are the things, these are the 5 items here that affect your credit score: payment history, amount owed, and the length of credit history is the next. And that is how old that account is that is on your credit. If you open up new accounts, you could have 4 new accounts and you pay them excellent. But if they're only a year old, it's not going to have a big impact right away on your credit or it's not going to be equal to an impact of someone that has 10-year credit cards and they've been reporting on the credit bureau for 10 years. So that's the difference in the length of credit history. Another thing very important is that if you do have credit cards, you're going to pay down those balances. A mistake that I've seen made also is that people will run out trying to do the right thing and they pay off that credit card and they close the account. Don't do that, because you are destroying your credit history. You're reducing that credit history. If you close an account that you've had for 3 years, that credit history is not going to be reflected anymore on your credit bureau, and that's going to lower your credit score. So you did a good thing and you have a bad result. So pay the card off, but leave it open. You can, once that card can stay open without any usage for about a 6-month period of time. After 6 months, though, that credit card company could close your account, and that would ruin your credit history. So every once in a while, you should charge something on that credit card just to make sure that it stays open. The next one is type of credit used. And this comes down to go back to the previous slide real quick. The 10% is the type of credit used. Installment loans, credit cards. You need to have a mixture or a diverse mixture on your credit bureau. I always recommend 2 credit cards and at least 1 installment loan. An installment loan can be that auto loan or a mortgage loan, but at least 2 credit cards, at least 2 revolving lines of credit. And next is credit inquiries. New credit inquiries count 10% against your credit score. They factor in. And so if you're out applying at a lot of different places, stop it. There's ways to do it. And if you don't know the rules, you can really hurt your credit score. The rules is that if you are applying with the same type of credit, if you're shopping for an auto, you can shop probably within a 30-day period of time. And you can apply at 4 to 5 different car dealerships trying to find that good deal for that car. As long as you're only applying for auto loans, and if you apply at 5 different places, it's only going to account for 1 inquiry. But if you do it over a long period, if you stretch it out over a large period of time, you're going to have 5 different inquiries on your credit bureau. And every inquiry is going to knock your credit score down 10 to 15 points, each inquiry. So also during that time,
knew that. That's good.
Yeah.
That is.
Yeah. Also during that time, you have to keep it in the same type of inquiry. What do I mean by the same type of inquiry? If you're trying to get credit cards, only apply for credit cards. Don't apply for 2 credit cards and an auto loan, because then you're going to have 3 different inquiries. Okay. Don't apply for a mortgage loan, an auto loan, and 2 credit cards. All of those are different factors, and they're going to all come out as different inquiries on your credit report. Go to the next slide.
That's good.
Any questions on that?
No, that's good. I wasn't aware of that. That's a good one.
So ways to manage and improve your credit. Check your credit report regularly. Chart your progress. You can go to annualcreditreport.com and pull a copy of your credit report once a year, absolutely free. Okay? There are also online credit companies. Some I recommend, some other ones I don't. Credit Karma, everybody goes to Credit Karma. Okay? And Credit Karma, let me say this on Credit Karma. They give you a guideline of what your credit scores might be, but they're not very accurate. Okay, so if you're looking for accurate, if you get your Credit Karma score and it tells you that you're at a 700 and you go to a bank to apply for a loan, that same bank might only pull a 640 credit score, because they use a completely different scoring system with Credit Karma than the banks use. They use what they call a Vantage scoring system. Claude, you're familiar with that, and the
Yep.
Vantage is a completely different scoring system than the FICO scoring system what banks use. Next, let's pay your bills before the due date. Don't wait to if your bill is due on the 15th, don't wait till the 15th to pay it. Pay it before the due date because you could be late, you could have a mistake, the bank could have a mistake. Don't give them a chance to mess up your credit. Next is make sure your creditors are reporting your information to the credit reporting agencies. You have to make sure that if you have a loan that they are reporting it to all three of the credit agencies. And sometimes it's by mistake that they don't. And sometimes they purposely just don't report. Just for your information, if you go to any payday loans, they're not going to report. They do not report, especially if you pay them on time. They don't want anybody to know that you're paying them on time because they want you to keep coming back. They want to keep your credit messed up. So they will never report until you miss a payment.
Wow.
Yes. Then the next is, this is a good way to establish your credit. Establish your credit. If you don't have any credit and you're looking to get your credit established, get a secured credit card. Now, you will have to pay a small deposit to start. Most of the time that deposit is a $200 deposit, and they'll give you a $200 credit limit. And after you prove that you can make your payments on time over a period, they'll raise that credit limit. And eventually, in about a year to a year and a half, you can request that $200, your deposit, back because you've proved that you can make your payments and that you are a good credit risk. So get a secured credit card to establish your credit. Some other ways to establish your credit. Any questions?
Yes, I actually wanted to kind of touch on because we work with a lot of college students and they get bombarded with credit card offers. And so that's one of the ways to either help or hinder. So what would be some great advice to give that student that's, starting out, wanting to make a good step forward in formulating their credit? Like, what is the wisest way to proceed? Because you definitely want to proceed with caution because they will send you 10,000 of them in the mail.
Yeah. And I have seen young couples come into my office and they've already strangled out some of their credit cards and made some mistakes on some of their credit cards. You're right, because they will target students in the colleges and make them all types of offers. I've even had some say, well, dog, I didn't know I had to pay it back. Yeah, got to pay it back. You better pay it back. It's just, that's why the education, financial education, is so important at a young age to start getting this information. So when you're in that position of going to school, you don't get caught in that trap, because the credit cards they can be a big help to you, but they can also be very dangerous. You can hurt yourself with them if you don't know what you're doing. So, that's a whole PowerPoint presentation just on its own, is how credit cards can devastate you, because credit card debt can be very devastating. And I never want anyone to say, well, Mr. Stone told me to go out and just charge up a lot of credit cards. No. Don't do that. Don't do that. What I'm saying is that learn how to use your credit as a tool. And that's how it should be used. It should be used as a tool. And you have to know how to use that tool. Just like if a guy, I've got a guy that's doing some work for me in my basement now, and he's got this big drill down there. I mean, it's a tool. But if you don't know how to use that drill, you could mess up your hand. You could, or a saw, you could cut off your finger if you don't know how to use it. So the tool is useful, but you have to be able to use it correctly. Credit cards are a tool. I've known people that have become rich off of knowing how the right way to utilize their credit cards. And of course, we know all the stories of people that have filed bankruptcy because they didn't know how to properly use their credit cards.
Yeah, it goes
So,
both ways.
yes.
I want to add this real quick to what Mika just pointed out. I had a Discover card in college. I got in the mail. It was a $600 limit, and I'm like, oh my God, I'm rich. When you're in college and you're spending $20 a week for a haircut, going to the party, and you're washing your clothes. So when I got it, I was not mindful. I was mindful that I had to pay it back, but in my mind, I'm thinking the minimum payment's only $20. So I'm just going to make this minimum $20 payment that they keep putting on my statement. And so just a rule to the wise, if you're a student and you're getting a credit card offer in the mail, if you cannot pay off the full balance of what you're charging, don't do it. Because those minimum payments don't go away. I made minimum payments for 4 or 5 of them, and then I came up short one month, and then you don't send it in, and then they double up, and it just spirals out of control. So
yes,
I'm just telling you,
that is an excellent point, Claude, and that is an excellent rule of thumb. You know, if you can pay off your balance, if you can't pay off your balance by the end of the month, then don't do it.
Don't do it.
Don't do it. Now, luckily you might be in a position to where you have the money, and if your money is doing something else that's making money, you may just want to let that card float for a while and then pay off that balance when you can, if your other money is making some money with some other investments. But really, for the average person, credit cards can be a blessing, but they can also be a curse. However, we do need to have them. Okay, to get your credit scores where they need to be, you need to have at least 2 credit cards, revolving credit cards, on your credit bureau. So, are there any questions? I'm ready to answer questions.
Yeah, there's not any questions out of the chat yet, but I want to tie something together that you and Claude said that I thought was really good, because you mentioned earlier about with the credit scores, how what was once considered fair is now not necessarily fair. It's, in that bad part, the bad part. But Claude talks about when he was in college, he got that $600 credit card. And so now I know my daughter's in college, and her first credit card has $1,000 limit. And then she's gotten ones that have offered her $1,500 and $2,000. And so they're increasing these, dangling these huge carrots in front of these students. But then, it's like you said, if you go ahead and you partake in that and you spend this $2,000, what again was once fair credit, if you don't pay it, you can really, plummet very quickly. So I think it's important to have these type of conversations, because your credit isn't something that's being taught in school. There, it's just, if you don't talk about it amongst your family or get opportunities like this, it's just one of those things you just kind of jump out there and try to have to figure it out yourself.
Yeah, and they have a whole market out there to get you to keep charging on that credit card. Now they give you these incentives to charge on that credit card. We're going to give you cash back, and they make it sound so good. Believe me, these credit card companies aren't just giving you cash back because they like you. Yeah. They know that when you use that credit card, you're going to charge more than what you normally should, and that's what they want. Another point that I teach in some of my classes is that watch even out for your debit cards. A lot of people love debit cards, but let me give you a point to think about. When you go into Walmart and you have money in your pocket, let's say you have $50 in your pocket, and you have a debit card, you'll end up spending more money if you use that debit card. You know, you might go on and spend $75 when you don't really have it in your pocket, but you got that debit card. So I feel like I've really got that money. You see, it hurts. It doesn't hurt when you pull that debit card out of your pocket to shop. But when you have to pull that $50 out and hand it over, there's a little bit more pain involved.
It is. And look, I have a crazy story that someone, and look, you know her, Clyde, that taught me. So I'll tell it in a second, but we have a question out there for you, Ken, is how can I pay off a debt and get the item off of my credit?
How can you pay off a debt? You know, there's a lot of different ways to do it. To really give you a good answer, I would have to look at, you know, and taking a totality of what your situation is currently. There is something that I use for years and that I've had other people use to help them pay off debt. It's called the snowball method. And the snowball method is that you take all of your debts and you write them down, your credit card debts, what your monthly payments are, what your balances are, and the ones that have the lowest balance and the lowest monthly payment, you pay that off quickly. And then if that is a $25 a month payment, but the balance and your balance was $200, once you pay that $200 off and that $25, you can apply that $25 monthly payment to the next bill above. And do that, just keep repeating that, and you'll see that your debts will start disappearing. But if you're just talking about one particular debt, that was a question on how to pay it off and then get it off the credit report.
Yes.
Yeah, like something that's negative that's on there.
Okay. Now, I guess my question would be on that is, if you're making payments on that, why is it negative? If you're currently making payments, did you have a late payment on, is it a credit card? Is it an installment loan? There's different ways to attack that for different types of loans. So I would
say it's a collection. Let's say it's a person that has a collection that's on their credit, and now they're trying to they came into some stimulus money, and they want to use some of that stimulus money to kind of get their credit cleaned up. Should they just pay it off and hope that it's going to come off their credit? I mean, based upon your expertise, like what should they do to get that paid off and possibly off their credit as a negative item?
Okay, well, again, it depends on the type of bureau. Let's use the example of of a collection that we've all had before, and that's those nasty medical bill collections. We've all seen those. We've all had some emergency room visit or something, and now you've got this $400 emergency bill room charge, and you didn't pay it, you set it aside, didn't pay it, and boom, now it's hit your credit report. Okay, couple of things to be done first. First of all, you need to verify that is actually your debt. Okay, the Fair Credit Reporting Act allows you to verify and also to dispute any type of collection account. So first of all, you want to verify, and this is very important. You must have all three of your credit reports. Don't just look at two. Don't look at one. You need all three of your credit reports, because the first thing I want you to do on a medical bill collection is compare what is reported. Because if one medical bill collection on TransUnion has an account number, but the Equifax does not have an account number, then that is reported incorrectly. And anything that's reported incorrectly, you can dispute it and have it removed.
That's good.
Yeah. The first thing is you want to make sure that all of the items match up. And here's the great thing that people don't realize. A lot of times they don't match. If you compare Experian, Equifax, and TransUnion, a lot of times they all have something different on that same collection. They might have a different balance. One company might have that you owe them $300. another company might have that you owe them 250. Anything that's incorrect between the three credit bureaus can be disputed and removed.
So who do you contact to dispute, or what is the process that you will want to, just in simple form, because I know it can be complex, but what are some of the standard things that you teach people how to do to dispute a charge?
Well, there are several different types of dispute letters. There are some companies that have them online. Uh, some some places that will do it for you. Of course, you've got the credit repair companies that will do it for you. But a lot of times, if it's just one or two collections, you can take care of that yourself. I have copies of dispute letters that work very well, and if someone wants that information, I'd be glad to share it with them.
That's good.
But there are specific ways that you want to do it. Also, there is something that is called a pay to delete. And on a pay to delete, if you know that you do owe and it is a correct and everything is correct on that collection, you can call that company up and you can negotiate a payment with that company. And if it's a $300 account, you can call them up and say, listen, I'll pay you $200 today if you agree to remove this account history completely off of my credit bureau. Because a lot of times it doesn't do your credit score any good. You can pay that collection off and it will not improve your credit score. Unfortunately, it won't.
If it's not,
it will still show as a collection, but it will just show a zero balance.
Yep.
And your credit score, and some people say you have even seen their credit score get worse because there's been a change on the credit. So what you want to do is get them to agree that if you send them the payment that they agree to accept, that you'll only send it to them if they agree to remove the credit history, that collection, the history of that collection completely off your credit bureau. That alone could raise a person's credit score 50 to 60 points.
Yes. And you want to get that in writing. You want to get what you just said.
Yes, Claude, that's it. You have to get it in writing. If they say on the phone, yes, we will do that, you should type up a letter and send it to them.
Yep.
And send it to them. And you can send it to them. Now, I've even done it with the check and say, cashing this check.
That's right.
Is acceptance that an agreement that you will remove all collection history off of my credit reports. That may not be the exact wording, but I do have letters for that. And you can get a lot of your collections taken off. Some companies you can pay 25, 30 cents on the dollar and they'll accept it just to get paid and get that collection off. The thing about collections, I can go talk about collection companies because they are crooks. The collection companies are terrible because if a lot of times the company that turns a debt over to the collection company, a lot of times they've already been paid.
Or they write it off.
They write it off. They write it off. They receive a tax write-off. They receive a tax credit.
Mm-hmm.
Okay. Once they receive that tax credit and then they bundle that debt and they sell that debt to a collection company for 30 cents on the dollar, so they get paid again, then they get the tax credit. So they're happy. They've been paid. But that collection company is going to try to collect on that debt. So you really have to follow the rules, and there's a way that you can get rid of those collections on the debt company. I hate collection companies. Believe me, I was once so far in debt. I had collection companies calling me 9, 10 o'clock at night. I've been there before. I know. So I've been there. And there's a way that you can stop it. There's a way that you can stop it and you can get that stuff taken off your credit. There are some places that there are some credit reporting gurus that even teach don't pay them at all. I'm not going to teach that though. I'm not.
Right.
I'm not
So
going to teach. I'm not going to
yeah,
teach. I'm not going to teach you not to pay your debt, even though there's a way that you can get around paying it. I'm not going to teach that. Okay.
I
But
get it. So
using the Fair Credit Reporting Act, if you dispute, you can get inaccurate information taken off of your credit report. Even if you owe the debt, you can get inaccurate information disputed and taken off of your credit report.
So what I want to do is there is so much that you know when it comes to this area. And I wanted to spotlight you in this area as an expert, which you have proven that 10 times over. I want you to please tell people how they can get to you to get resources that you have for them, because you have a lot of free information out there for them to receive. But then also, if they want to talk to you about using you and your services, they need to know how to get in contact with you. So we're recording this, and we're going to also put a boost post. I haven't done that in a while, but we're going to do a boost post on this because I need to get this pushed out to more people. So can you let us know how to get in contact with you, what you specialize in helping people do, and then maybe any kind of closing comments that can help people get a little bit of inspiration that they don't have to stay in their situation forever. So I'll pass it over to you.
Okay, I can help you to straighten around your credit, to turn your credit around. I can show you how to remove items off of your credit. In some instances, you can do that absolutely free, you know. But there are some instances, depending on the type of problems that you have on your credit, that will take a more in-depth effort to get that stuff taken off your credit and removed. In those instances, I do have a service. There is a fee for that service, but it's very affordable. It's not the credit law center that's going to charge you $2,000 or $2,500.
Do you have a website, Mr. Stone, that people can go to connect with you?
I can send you that information, my contact information. How can I send that right now? I'd rather just give my phone number.
Okay.
Okay. Kenneth Stone, my phone number is 816-509-1230. And you can connect with me. My office is, I work at UMB Bank. And what I do is that I help folks get qualified for first-time homebuyer loans to buy their first homes. And that really is my passion, is to get people away from renting and to get people into their home, their first home or their second home. I help in both ways. But to do that, you have to get yourself in a position credit-wise to be able to qualify. And that's what I help people to do. Get your credit cleaned up, even if you don't use me to get your mortgage. I'm not here trying to sell myself as a mortgage guru. The most important thing is to turn your credit around, because it will turn your life around when you no longer have to worry about, am I going to qualify when I put in for this loan? And when I do put in for this loan, as Claude used it as an example earlier, am I going to be paying $750 for a $15,000 car? Claude, I don't know if you knew that I used to be a finance manager for a Ford dealership. I was a finance manager for 10 years. And because of that, I saw people coming in. And I saw them coming in and they wanting to qualify for, you see these special rates, 2%, 1%, 0% for your auto loan. And it used to hurt me when I would see some young people coming in, and mostly looked like me, that were walking out, and instead of qualifying for that 1% interest rate, they walked out with a 25% interest rate on their car. And instead, because of that car that they would be paying $300 a month for, they're paying $650 or $700 a month. like you said, wealth just disappearing out of your home, disappearing from your family, simply because of some mistakes that we've all made. But if you don't know how to correct those and turn those around, they will end up costing you thousands and thousands of dollars. In fact, over a lifetime, a person with their credit scores that are in the 500s over a lifetime will end up paying several $100,000 in overcharges because of interest and fees associated with bad credit. Several $100,000. And then we look at when we turn 60 and we're looking to retire and we don't have the funds available, or we don't have the wealth to pass down to our families. This is a generational curse that we can help to alleviate. And that is my passion.
I love it.
Clyde, and then I'll come and
Thank you. I'm about to say I'm in Uber dad mode, so my daughter's looking at me like, "Okay, Dad, let's wrap it up for basketball." So I'm gonna pass it over to you.
Hey, I really enjoyed it. I hope the information I shared helps some people. And if they want to get in contact with me, please feel free to call me.
Yes. So I did just a couple takeaways right quick that I want to hone in on is that families, parents, students, this is a conversation that is important to have because it can either create generational wealth or generational non-wealth. It can literally cost you, like Ken said, hundreds of thousands of dollars. And I believe a big part of it is simply because this conversation isn't had.
Yes.
So if you have tuned in today, please like, share, get someone in your family to hear this message and contact Mr. Stone. He has offered his services. He said most of them are free. We really want to see you win, your children win, your children win. Like you said, he is on a crusade to change a generational pattern that we have really walked down. So we thank you so much, Mr. Stone.
You're welcome.
Man, love you, brother, man. You know that. I appreciate you. You're like a dad, man. So I definitely appreciate you for real.
Yes, this information has been so valuable. I took notes, and I'm sure that everyone else out there, that there is something that was said that can definitely help change the trajectory of your family's financial future. So thank you again, Mr. Stone, and thank you guys for tuning in to College Coaching Network for our special program today.
More of Mr. Stone to come. Good night.